Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. An immediate countering bearish cloud cover pattern on Friday, as the market still will not let go of the area around the crossover early last week of the broken but possibly repaired upper trend line of the October-based bull channel, currently at 109.61, which is highlighted in green on my daily chart, and the broken lower bull channel line of the 2023 bull channel, highlighted in dark blue on my daily chart, and that's currently at 109.41. I still have my doubts about the October-based bull channel. It was good in October and November when it formed part of the wide V bottom formed between July and November, but the break higher in mid-November, though it managed to achieve the primary target for the July to October bear channel at 109.98, it has seemingly failed so far to follow on to the secondary hard-to-reach target X2 in the 111.11 area, and I'm wondering whether to retire the secondary target or not. We also have in the mix the 50% Fibonacci line of the January 2021 to September 2022 move at 109.44. Finally, I have still kept the early November to early December bullish Andrews pitchfork, not highlighted, on the daily chart for now. I do not have any special attachment to it, and I could easily finesse it into a bullish shift pitchfork or retire it completely, but for now I'll keep it. So far today, a slightly higher open, or it looks like a possible bullish harami right now. Below we have the 50% Fibonacci line for 2023 at 108.64. Cable, aka sterling against the US dollar. A bearish harami on Friday, but also an important outside week last week, with the market closing back below the significant 50% Fibonacci line of the big June 2016 to September 2022 move at 126.99. However, the base of the action, the slowly rising long moving average, currently at 125.08, well, that remains intact. I continue to wonder if the recent late November peak and the peak last week, whether they together are the beginnings of a handle formation to a late August to date potential cup of with handle pattern. It also may have a possible bullish halfway hesitation pattern, which is intrinsic as part of the handle. I'm still hoping to know more on these by the year end. The one pattern I know is in existence is the bow tie formation formed 2 weeks ago, and that's of the short moving average, currently at 125.99, the medium moving average, and the long moving average. Now, the moving averages did not enter in the correct order, but they did cross over on the 1st of December and indicated a rise immediately after, even if entry and exit were not unanimous. This casts a shadow on the cup with handle pattern, maybe moving it more towards a bullish halfway hesitation idea, though it is still early. Nevertheless, the theory behind this suggests that between 15 to 20 sessions after crossover, so that is between Christmas and New Year, we may see a move upwards in the direction of the moving averages as they crossed over. With the lack of liquidity over this period, I think I might add a few days onto the new year, just in case. It is not looking great as a concept right now. Now, so far today, a small dip to the September 2020 low at 126.99, though it isn't that great a move as yet. Overhead, we still have the 50% Fibonacci line at 126.99. Euro sterling. A second bearish black crow on Friday, as the overhead resistance of the flatlining medium moving average, currently at 86.36, and the highlighted in mauve on my daily chart, well, that continues to cap the market. Prices have recently been trading within a range capped by this medium moving average and based underneath on the March 2022 today uptrend below, which is highlighted in bright green on my daily chart, and that's currently at 85.55. Above the medium moving average, you have the combination of the short medium moving average, currently 86.65, and the April 2020 low 86.69 as the next obstacle. Now, one further item, and it's a significant one to understand. Despite Friday's bearish action, we still ended up with a weekly key reversal up for last week. Now, so far today, a lower open but an immediate move higher, moving above Friday's action and towards the medium moving average, and looking like a bullish engulfing pattern, bullish opening white Mariposa and bullish engulfing pattern right now. US dollar against the Indian rupee. A big bearish long black Mariposa on Friday. That was also another day 2 in a 2-day separating lines pattern. The move down broke through and closed below some significant supports, notably the October 2022 high at 83.27, the short medium moving average currently 83.24, and the medium moving average currently 83.11. Prices also broke down through the lower bull channel currently at 82.99 of the significant September to date bull channel, highlighted on my daily chart in dark blue. Now this bull channel is the emergence we've seen from the prior pattern, which is the July to October ascending triangle. However, the bull channel, this shallow bull channel, is not the most enthusiastic of patterns, but it's still there and tied in well with last week's weekly key reversal up, or should we say, yeah, the week before last weekly key reversal up and last month's monthly key reversal up. Thus, a penetration of the lower channel line is a significant feature. The drop halted at the same November 2023 low at 82.90. So far today, another dip down to the 82.90 zone, testing it but not able to properly penetrate it and pulling back up to over the breached lower bull channel line. This seems to be getting very tense right now. US dollar against the Brazilian real. A second bullish white soldier that supported the previous session's counter bullish open and close white Mariboso, but also offset that session as a day 2 in a 2-day meeting lines pattern. We also saw the capping action of the combination of the slowly rising medium moving average, currently at 495.14, and the slowly declining long moving average, currently at 494.81. Then on top of all that, last week ended finishing up as a weekly key reversal up. Overall, the market is still within the previously broken August to September rectangle pattern, which is highlighted in purple on my daily chart, and that's currently 483.52 to 497.22. And swirling around the upper trend line, we have the 50% Fibonacci line of the October 2019 to May 2020 move at 496.81. And the slowly declining short medium moving average, currently 496.35. Whilst roughly parallel to the lower trend line, we have the 50% Fibonacci line of the June 2019 to May 2020 move at 484.26. In the bigger picture, the market is still well within the breached but repaired November 2022 to date bear channel, currently 466.14 to 511 even. And that's highlighted in bright red on my daily chart. Now, I'd just like to take a moment to once again appreciate this bear channel, as it has been in operation now for well over a year. The only other comment I can give is how very much like a head and shoulders pattern the action since late July to date has been. No more than that at this time. US dollar against the Mexican peso. An indecisive doji cross on Friday, though it could be seen as a possible gravestone doji, though in the wrong place, coming as it did at the end of the 2 prior bearish black crow sessions, the first of which was actually a key reversal down. Prices last week, and I suppose the week before as well, reacted to the overhead capping action of the combination of the medium moving average, currently at 1741.93, the July 2017 low at 1743.62, the slowly declining long moving average currently at 1750.24, the August 2017 low at 1756.93, and the slowly declining short medium moving average currently at 1762.38. Reacted to all of them by pulling back down. However, there was also support below from the March 2016 low at 1709.23, the April 2016 low at 1703.89, and some interest from the green colored neckline currently at 1708.16 of the February to April 2021 head and shoulders top. Now, overall, we are just after the market reaching its downside targets, both primary and secondary, for the September to October bull channel. And I suspect, once again, this market is searching for the next thing to do. Now, so far today, a slightly higher open with a small move higher, but we are still well within last Friday's range.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final important bit.